Hello and welcome to Compass Global Markets Weekly Update. I'm Tony Boyajian. Well, it's a short trading this week. It'll be illiquid markets as well because the US market will be closed on Thursday for Thanksgiving public holiday, and that'll extend through on Friday as well. We've seen a higher US dollar trade just over the past 24 hours. The moves do, however, remain limited as the market still have these ongoing deliberations about the US tax reform package. So the market will await for tomorrow's Fed meeting minutes before, of course, the market closes for the public holiday on Thanksgiving. Now, current market pricing in the US suggests that there's a 90% chance that they'll raise interest rates next month in December. Now, this is the case even though the Fed's preferred measure of inflation, the PCE number, is actually going to be out on the 30th of November. Now, that number has been really low lately. It's fallen from 1.9% to 1.3%. If it's a weak number like that, like say a 1.6% or lower, it might be a cause for pause. So we could see the market reevaluate the rate hike potential if that PCE number, the Fed's preferred measure of inflation on the 30th of November, is quite low. Now, in breaking news, we've just learned that Fed Chair Janet Yellen will leave the Fed after her successor Jerome Powell is sworn in. Now, that'll happen in February next year. So it looks like Janet Yellen won't remain as a governor on the Federal Reserve, and that means that President Trump will now need to fill 3 vacant spots out of the 7 Fed board's members. So the Senate's recently confirmed that Randall Qualls will be filling one of those spots, but there are 3 other vacant seats out of the 7 Fed governors that make up the board that President Donald Trump still needs to fill. Now, locally, we've seen the Australian dollar trade at 5-month lows. It's just hanging on to 75 cents as we speak, as the yield difference between the bond rates between Australia and the US narrow to their to sort of levels we haven't seen since the year 2000 when the Sydney Olympic Games happened. So that's seen the Australian dollar come off its recent highs. You may recall the Australian dollar was trading as high as 80 US cents only 6 to 8 weeks ago. It's now trading at 75 US cents, and there's a very good reason that it could fall another cent back down to 74 by the end of this week. Now, today's RBA minutes of the meeting, the recent meeting, confirmed that interest rates are definitely on hold. No surprises there. They also spoke about inflationary pressures. Now, tonight, RBA Governor Gov Lowe will speak at a function in Sydney. It's at 8:05 p.m. The market will be wary of comments he may or may not make, but regarding this high household debt level, wages growth being at record lows, and inflation remaining below the Reserve Bank's targeted level of 2 to 3%. Elsewhere, we've seen the New Zealand dollar trade at 17-month lows against the Aussie. The Aussie-Kiwi cross rate has fallen from 112 to 110. The euro is also weaker. There's 2 reasons for that. First of all, ECB President Draghi commented overnight that economic expansion in the Eurozone is broad-based, but inflation levels remain subdued. And also, we've seen some German political risk. Angela Merkel, the Chancellor there, has tried to form a government, a coalition government, and those talks have broken down. So there is a realistic possibility that Germany may face new elections, hence the reason why the euro has sold off. Now, the pound sterling, on the other hand, has appreciated as reports emanate that UK Prime Minister Theresa May has a support of the Cabinet to increase the Brexit bill, the so-called divorce bill that may improve negotiations between the UK and the EU regarding this establishment of a transition agreement. So certainly watch this space for further developments. Don't forget to watch us on Thursday lunchtime at 12:15 for our weekly Sky News business wrap on financial markets. Have a great week. I'm Tony Boyajian.